Hi there, welcome to GrainTV. I'm Kevin McNew. It's Tuesday, January 31st, and a day of consolidation after yesterday's heavy losses. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn up 1 3/4, closing just below 360. Beans gaining 1.5, and Chicago wheat got a late session rally to close up 6 today. Really, there was very little news to talk about. There was really just sort of continued theme of good growing conditions in South America, harvest getting underway in Brazil, and so the pressure really continues to be on the bean market, which is taking back its rally that we started back after the January 12th crop report. Other news out today, when we look at Brazil, we're seeing heavy lineups of vessels getting ready to load the new crop beans coming off the combines there. Analysts that tracks ocean vessels said that they expect 4.3 million metric tons of Brazilian beans to be loaded in the next month, and that would be up almost double from the same month last year. So that is certainly indicative of what could potentially be pressuring the bean market as we move forward into February. Also, looking at the weather forecast in Mato Grosso, where they are now harvesting beans, the conditions look very favorable. It's been a little wet. Although it's been wet, we have seen very good harvest progress up above the 5-year average and up above last year, with about 16% of the crop cut in that major producing region of Brazil. The next 2 weeks look fairly good in terms of getting the crop cut. Also enough moisture in the forecast to help stimulate the second season safrinha crop of corn to get planted. Mato Grosso is about the largest producer of that second season corn crop, producing about 40%. So that all looks very favorable and certainly is bearish for the market as we move forward into February. Other news out today, let's talk about what's going on in export competitiveness. We did have some really strong moves lower in the U.S. dollar. That would certainly help the situation for U.S. export competitiveness. But when we look at yesterday's prices before this big move lower in the dollar, what we see is we've been starting to see some erosion in our competitive position versus other foreign trading partners in the world. As we look at corn in particular, Brazil's corn premium really deflated in the last week as they get closer to better supply situations. Obviously, last year they had a very short crop for corn that led them to be an importer of corn from Argentina. All that's going to change this season. They're going to have a big crop. Argentina's likely going to have a big crop. And we saw Brazilians' corn export price really plummet sharply in the last week, moving down relative to the U.S. price. Even Argentina backing off on their price relative to the U.S. price. So these numbers in red are the price spreads of foreign competitor prices versus U.S. prices. When they go down, that means the U.S. prices the foreign prices are moving lower relative to the U.S., so that's a bad thing for U.S. competitiveness. Green indicates that they moved higher in the last week. Foreign competition raised their prices relative to U.S., which is positive for the U.S. And you can see in wheat also, as well, we had a negative week in terms of our export competitiveness, shrinking against Argentina and against the EU. Now, again, the U.S. dollar took a heavy hit today, almost losing as much as 1% on the U.S. dollar index, which is positive. We've had a very strong dollar after the November 8th election, getting up to as high as 102, 103 on that U.S. dollar index. We've now backed down below 100. Hopefully this will be a trend that will continue as we move forward, but certainly it's been somewhat of a hindrance, especially in wheat, where we are very export sensitive, we're very sensitive to export competition in the wheat market. Switching gears, let's take a look at March soybeans. We've been on a downhill slide since that 1080 high set nearly 2 weeks ago. We've had very little correction back. Any sort of correction has been short-lived and been a selling opportunity. Today we touched down on the 1019.5 mark, same low as of yesterday, so watch out for that. That 1019.5 right now is temporarily support. I would not expect it to last. I think we continue to push down and get back to the level we were before the January 12th crop report, with everything looking so favorable in South America as they enter the early stages of their harvest. As always, if you'd like to learn more about how we can help you in your own grain trading situation, visit us online at grainhead.com. Have a great day, and we'll talk to you tomorrow.